Bulls are reversing up from a double bottom after a 54% drawdown. Is this the move that bulls have been waiting for? Is this reversal up reliable? Hello everyone and welcome back to this week's Bitcoin price action analysis. My name is Josep Capó. I hold a financial markets master's degree. I am a trader and an author for the Brooks Trading Course website. Thank you for joining us another week again. And as we have been saying in the introduction, Bitcoin is reversing up. This week the price break down below the previous week's low, triggering a bear breakout. And now the bar is reversing up and is near its high, so it's a bull reversal bar. What does this bull reversal bar means? Well, let's analyze the overall context as we usually do. The overall context is that the market was in a long-term bull trend and then it started to create a trading range. That trading range break down. And since we were in a longer term trading range, normally there is a breakdown and a resumption that becomes eventually a trading range, or there is a couple of legs down and then the trading range. That's the most common transition after a strong bull trend. The strong bull trend was on the higher time frame, in this case the monthly chart. Now the price printed a couple of legs down, one leg down, pull back, two legs down, and even a third, three legs down, which is considered, at least by my own discretion, as a complex leg two. So this is just the second leg, right? So it's a complex second leg. Now, the point is that after reaching a measured move target based upon the trading range here on the upper side of this chart, so the market break down and did a measured move down. The market also has done a couple of legs down, maybe has not reached clearly the height of the first leg, but that's not always a requirement at all. It is just that the market printed a second leg of enough height. It can continue lower. Yes, we are going to explain now the why, but the point is that the market has complete a structure, and after a structure is complete, in this case a couple of legs down in a possible trading range from a higher time frame, then the most likely outcome are a couple of legs up. We have been discussing this from a long time. Of course, we are always giving an open window to the unexpected. The unexpected are 25 or 30 to 20 to 30% chance scenarios that occur every now and then. So 2 times out of 10, it is more frequent than what people think. What this means? Well, once the market has completed these structures, now we are waiting for the couple of legs up. The market here attempted to go higher. It did a bull breakout of this bear flag, but it failed, and bears test again here whether there were sellers or not, whether there were buyers or not. The market can continue lower until bulls take the control. Have bulls taken controls with this week's bull reversal bar? Not yet, at least on this time frame. We are going to zoom into the daily chart later, which is very interesting to watch this pattern evolving in a lower time frame. However, on this time frame, the bulls need at least a close above this minor lower high, so above the $65,000 or $66,000 area. They need a close here because for now it may be just a pullback into this small bear leg. Now the bulls that want to buy above this bull reversal bar, I think that's a good strategy, because the potential is that the bulls are going to begin with a bull swing. It is a high 2, so high 1 is this bull bar because it was triggered by a bull breakout of this bar here. And now this, if the next week of course triggers above this week's high, and this week's high at the time of the writing it's Saturday, and so it's full Sunday left before the bar closes, before the weekly bar closes. So if this bar looks like this, is still below this bear control area, but it close near the high, it will be a good high to buy. The risk is small, so bulls can put a stop loss below the low, one tick below the low of that bull bar, and they have a lot of potential. Lot of potential means low probability. So if you are going to risk, one to make this trade, will be to make at least two, right? So it is this trade, I think that at least has a 40% chance of success. Now, traders like me like to wait for the follow through, because traders like me prefer higher probability of another, at least a small second leg in the direction of the reversal in this case, right? Another good point for the bull reversal is that this is a double bottom with the February low, and now it's a double bottom here. It is true that bears did a very strong bear leg here. That's why the high one was challenging to buy. It was an inside bar, which is not the after a bear climax. That's not a bad thing to buy, but it's again low probability, but huge potential. Bears are still in control. They can perfectly take the control, but we have the higher time frame supports, and with that, for example, to be a seller at support is something that is not advisable. We are not advising trades here. We are just for educational purpose discussing how this kind of scenarios can be traded, right? So I think that this high 2, it has enough good context to be bought. I think that it has enough probability to be profitable in the long term if traders manage their trade properly and they go for the minimum 2-to-1 reward to risk target. And there is another thing that I want to discuss. It is that we just closed the June's month, right? The June's candlestick, the second quarter of the year. So after each quarter, there is kind of big rebalances from institutions that they are buying if they are below their percentage threshold that they have to hold from these particular assets. So if an asset rises and they have to have say a 10% of Bitcoin into that fund, then if the price rises during that quarter, they have to sell in order to have always a 10% of the portion of that in their account. But if it goes down, they have to buy. So Bitcoin is low. It was also low during the previous quarters, but it is a force that it has to be taken into account. So after each month or after each quarter, there can be major reversals in the weekly or monthly charts, or daily charts as well, of course. So it's a thing to note. Now we are going to go to the daily chart, but I want you remember that within the Brooks Trading Course website, there is everything that you need to become a good price action trader. We have the Learn to Trade tab, which for me it's pure gold. You can find there the how to trade manual. You can find there the best patterns. This is a reference for me nowadays too. And then there are other resources like the becoming a professional price action trader, that is an article written by the arguably the best price action students from Albrook's, who better to tell you what's the best path to becoming a professional price action trader. And finally, here is the daily chart. The daily chart is very interesting because, as we are seeing here, there are 3 consecutive bull bars. The bars are good, and now we are wondering, as always, the very first question that every trader asks in front of the chart is whether we are always in long or always in short. If we cannot answer that, we are in a trading range. If we can answer that, we have already a bias into the market, at least in the short term. So no, for me, the bulls have taken control above this $60,000 area, which was needed for them, because if not, we were expecting another leg down and maybe go downwards towards the $50,000 mark. But the bulls have reversed up and they created 3 strong bull bars. Some can argue that the bull bars are decreasing in size, and that's a sign that they are losing momentum, and that may be indicating that there will be a pullback happening within the next bars. That's, I think, all that arguments are valid, but the point is that the market it's likely going to test at least this bears area, this area where bears have control above the $64,000 area, and I think that's the more likely outcome. I don't think that the price will just fail now without testing these levels above. They are probably like to test this lower high, and they are likely going to have at least some kind of second leg sideways to up. So I will be looking for also longs on this chart, because also we are in the higher time frame in a double bottom with a level on the left. Now we are low in that trading range, and this is the first bull leg in the trading range. So bulls have chances of seriously testing the upper boundary of at least this trading range. As we have seen, that would mean that in the weekly chart, if we test here, if we close or above these major lower highs, that will mean that the weekly chart is in a good position to keep testing higher, because we are also in a double bottom on the weekly chart. So this is the kind of situation that instead of a scalping, I would consider like holding for a swing if a trigger, or if my entry triggers. Ways to trigger: well, you can wait for a 50% pullback of whatever this bull leg become. You can wait to buy below a strong bull bar, or you can wait to buy after a strong breakout, a strong bull breakout. So there is a lot of excuses to look to buy after an always in flip to long, after within a trading range, the first bull leg that flips to long into a trading range. That's what I think. So if you buy high, so if you are chasing the breakout, like you need to use a wider stop, and hence you need to reduce probably the position size, or use a smaller position size in order to scale in case there is a pullback. So that's how it works. For the bears, I won't be a bear until bulls lost control. So maybe if now there is a bear reversal, these bulls fail, which is of course possible. If these bulls fail and the bears take control below this double bottom, that means closures below this double bottom, I think that the bears may have another more downwards, down to the $50,000 area. But since that's not the most likely scenario right now, and the most likely scenario is that the bulls are trying to test higher, and they are successful in testing these highs and the high of this actual trading range, then I believe that traders should look to buy and at least expect a small second leg up. If you are like if or those that prefer to take scalp profits, they might just take out half of the position when they get a scalp and trust their stop loss and trade for a swing based upon their higher time frame analysis. I think that I am a firm believer that you can use that higher time frames kind of frameworks to swing on the trading time frame. Al Brooks says that this is, of course, this is something you can do, but that the best for beginners is just to think about trading the chart that is in front of them, because managing the data from other charts may become confusing. So, but in my view of the market right now, I believe that having this framework on the weekly chart that is not confirmed yet, but it gives you a greater possibility, so a greater risk reward equation, and that's something that I will be looking for to trade. So again, this is just for educational purpose, but when we have something interesting in the chart like breakouts and areas where these things can be discussed, we are traders and we are trying to find trades. So this is a good situation to try. And that's all I've got for you today. I hope you enjoy your analysis. Thank you for commenting these analysis, these reports week after week. I appreciate very much the support. And please do not forget to visit the Brooks Trading Course website for more. See you the next week.